Right now, a bank can freeze your account. They can lock you out of your money without asking. No warning call, no text message. You try to pay rent and your card declines. This isn't a scam story. This is standard banking policy, and it's happened to regular people. You'll know the exact 5 triggers and the simple account structure that keeps it from happening to you. Here's what's coming. The legal reasons banks are allowed to freeze your account without notice, how fast it happens, and the one habit banking regulators say triggers more freezes than almost anything else. Stick around, because the final strategy, the one that actually protects you, is the part most people skip past, and it's the most important thing in this video. Banks don't freeze accounts because they feel like it. They do it because they're legally required to, in specific situations. First, a court judgment.
If someone sues you and wins, a court can order your bank to freeze funds before you can withdraw them. Second, a tax levy. In the US, the IRS can order a freeze if you owe back taxes and ignored their notices.
It is the same idea with the CRA, HMRC, and the ATO. Third, suspected fraud. If the bank system flags your account, they freeze first and ask questions later.
Fourth, anti-money laundering rules. Banks are legally required to report and sometimes freeze large or unusual cash movements. Fifth, account disputes.
Joint accounts can be frozen during a divorce or immediately after one account holder dies. None of this requires you to have done anything wrong. That's the part that surprises people.
Here's a pattern that plays out constantly. Someone sells a car for $9,000 in cash, deposits it, and 2 days later, their whole account is frozen. Not just that $9,000, all of it. Why? Because $9,000 in cash sits right under the $10,000 reporting threshold, and banks are trained to flag deposits that look like they're structured to avoid it, even when the person did nothing illegal. The account stays locked while the bank files paperwork, and waits, sometimes for weeks. The lesson isn't don't sell things for cash, it's banks act first, explain later.
And this is the one regulators flag constantly. Sudden, unexplained changes in account behavior. If you normally keep dollars moving through an account, and suddenly a large, irregular deposit shows up,
Crypto cash out, insurance settlement, that mismatch between your normal pattern and the new activity is exactly what automated fraud detection systems are built to catch. It's not personal, it's a pattern matching algorithm, and you just tripped it. The fix isn't to avoid large deposits, it's to know they can trigger a hold and to have a paper trail ready. Everything so far explains why this happens. But there's a specific account structure, the one banking security consultants actually recommend. That means even if one account gets frozen, you're never locked out of your money completely. That's coming up, and it's simpler than you'd think. Automatic payments you have set up, like rent or a loan payment, will bounce. That triggers late fees somewhere else, which is the second wave of damage most people don't see coming. The instinct most people have is to call the bank and argue. That rarely speeds anything up, because the frontline rep usually can't override a compliance flag. It's not their decision. It works when dealing with a freeze. First, request the specific freeze reason in writing. Then, ask for the specific department handling it, especially if it involves a tax or legal matter.
Here's the strategy. Never keep 100% of your accessible cash in a single account at a single bank. Split it 3 ways. 1, a primary checking account at your main bank for everyday spending.
2, a separate savings or checking account at a different bank or credit union. Different enough that if one institution flags and freezes an account.
3, a small cash buffer. Enough to cover about a week of essentials. Outside the banking system.
On top of that structure, keep documentation for any large deposit. A bill of sale, a settlement letter, a pay stub, for at least a year, because that paperwork is what gets a fast instead of slow. This isn't about avoiding banks. It's about making sure one flag, one algorithm, one clerical delay never has the power to cut off 100% of your cash at once. Banks can freeze accounts for court orders, tax debts, fraud flags, anti-money laundering rules, and account disputes, and they can do it without warning you first. You can't eliminate that risk completely, but you can make sure it never fully locks you out. Split your money across 2 separate institutions. Keep a small cash buffer. Hold on to paperwork for any large or unusual deposit. That's the difference between a frozen account being an inconvenience and it being a financial emergency. If this changed how you think about where you keep your money, hit like. It tells YouTube to show this to more people who need to see it. Subscribe to Dollar Blueprint for more of this. And in the comments, Has this ever happened to you or someone you know? Tell me what happened. DeLife.